And we welcome Larry Tabb. He's the founder and CEO of market research and advisory firm Tabb Group, live from Boston. Larry, good to have you back on the program.
Oh, thanks, Betty. Great to be here.
And I just want to, briefly explain high-frequency trading for some of our viewers who are not familiar with it. I mean, it's basically all about speed, right? I mean, it's using these supercomputers to make these trades in really just a microsecond. And Larry, as I know, you actually say it's a good thing that they're banding together for this lobby group.
Yeah, absolutely. I think that the high-frequency groups have been given pretty much a pretty poor name in the market. They've been generally very secretive, mostly because they don't really have any customers. So there's really not a whole need for marketing. So they're very, they've been very insular and very quiet.
And so that
now
sounds
it's time
like,
for them to speak up.
Right, that sounds like that's about to change. I mean, what is going to be an effective strategy for them to make that argument that they're not nefarious, that they're actually helping the markets?
I think the strategy is that they need to understand, they need to make people understand that actually more trading is better for everyone. The more trading there is, the more competition there is to determine what price there is, the more people there are to provide liquidity to the market. So when mutual funds or hedge funds or big investors want to come in, there are more people to trade with, as well as small investors. The more people that are trading, the more liquidity there is in the market, the healthier the market is, and the easier it is to get in and get out of a name that you want to buy.
Right, and I've heard that argument, but that doesn't seem to stop this sort of train that's going on in D.C. against these high-frequency traders because of the whole argument from them that this may help liquidity overall, but it doesn't help the mom-and-pop trader, though. So what is going to be the most effective argument to tell them that that actually is a benefit to them?
It actually does help the mom-and-pop investor. All of these new technologies basically enable people to get in and out of the market easier and less expensively. The price of trading has gone down for virtually everyone. The amount of liquidity has gone up. It just enables...
But Larry, it also drives prices up, too. I mean, it can go both ways.
Not necessarily, because to a certain extent, most of these guys want to go home at the end of the day flat. So anything that they're going to wind up buying, they're going to wind up selling at a later point in time. So what they're doing is basically, plugging holes in the market where there aren't people trading. So they'll buy in when there's a momentary lapse in buyers and sell out when there's a gap of sellers.
Okay. Larry, in the time that remains, tell us a bit about what you know about this lobby group, because as I understand it, they've been meeting in Chicago for several months. It's going to be the 25 largest firms, but who exactly, how much money is going to go into it? Is it going to be formally formed next year, in the early part of next year? Give us some details about what you know about this.
I'm not fully up to speed on what they're doing, but it's a group of the high-frequency folks that generally work out of Chicago. A lot of these guys are started in the futures markets and now are broadening out to the equities markets. And they've basically been very insular, as I said, and they're trying to get their opinion heard on down in Washington. And I think it's about time. I think these guys need to step up. Basically tell the market that they're not doing anything nefarious. They're adding liquidity to the market, and they're making it a much more effective place for everyone to trade.
Okay, Larry, good to have you back with us on the program, Larry Tabb.